Hey, good afternoon. This is Eric with Inspired Trading. Hope y'all are having a great weekend. So I'm just going over Bitcoin so we can get some maybe some potential targets of where we think it can head to. All right, so I'm on a weekly chart. I have a green box that's showing some area of resistance. This used to be, you see right here, there used to be an area of support. All right. We broke that support. Remember, when support is broken, it becomes the immediate resistance. And resistance is broken, it becomes the immediate support. All right. So this area was a key level of support at one point and resistance. All right. So since this level was broken, we're coming back up. We're testing it again. Okay. Always look left for market structure and clues. Okay. So you see this area, all this is clues. All right. So now, with that being said, since we're having a hard time breaking through this level, we need to watch this level. If we break this level, then we can head up to the next level, which is a key level as well, which is the 10,500 area, 600 area, right in this area right here. All right. We need to break this. If we do not break this area, we could see a move potentially back down here. All right. So uh, we have to monitor this area because it's a key level. All right. In order for us to see Bitcoin go up higher, we need to break this level. I'm sorry, that's all it is in trading. You got to break key levels of resistance and support. It depends on what direction you're taking your trade in, and it's nothing else to it. I mean, that's as simple as you can get. You can try to use all these fancy terms, these fancy things. No. Now, yes, if you're an investor, I mean, your main thing is, hey, you just want to accumulate at key levels that allow you to. Is this a buying opportunity? No. All right. Yeah, the best buying opportunity will be as long as we're under the moving average. All right. See under the moving average, under the moving, these are buying. All right. This is buying. It's under. As long as we're above the moving average, you do not want to, how I want to say it, see, if you're investing, you don't want to, so to speak, uh, start accumulating too much over the moving average. You want to accumulate as much as possible under. All right, it's going to be times where it's going to go lower and lower. All right, so yes, right. If you look over here, all right, a trader, they're looking to enter in right here because they're looking to what? Trade to the next level of, you enter here where you trade it to. Next level of key what? Resistance. So they take their profits here. Yes, they could have went up this high, all right, but most traders who know what they're doing, they don't get too greedy, all right, so staying here. Or if they want to stay tight to their rules, as long as this doesn't pierce and close below um, this moving average, that stay into the trade, all right. So somebody who does that, they would have got out right here. They would have entered here, around 3,000 something, and they would have got out around 10,825. Okay, so that's as simple as you can get. So if you're an investor, you probably would have thought about down here. All right. Yes, a trader can go down. We can go down on a lower time frame. I'm pretty sure the moving averages would have suggested there was a buying opportunity. So, but like I said, we're on a weekly. So know the difference between being an investor and a trader. All right. Um, right now, if you look and accumulate, this a region that you don't. What you do want to hope for is that either price is going to come back down to this area from here, or once again, we got to come up here and we got to retest or break through. We got to retest this area, okay, and we can hope for price to come here. And if we do not break it, we possibly could come either we'll come here to retest. Remember again, if resistance is broken, it becomes a new support. So right here will be the new support if this is broken. So if it's a new support, a trader or maybe an investor may say, hey, this is a what? This is a continuation. All right. Once we get a bounce here, it suggests that it's possibly a trend continuation. We just have a nice little pullback, and then we can go higher. All right. But everything in investing is all about, and it could come on down in this area. All right. It's just really about rules. All right. If the defense want to give me a prevent defense, then I'm gonna throw the ball underneath, or I may run the ball on you. If you're playing football, if you understand that terminology. All right. Defense want to stay tight. All right. Okay, then we can open you up, you know what I'm saying, with the pass, okay, for the deep ball. Okay, so it's different things that you can do, but you basically taking what the market gives you. All right, stop forcing trades. Okay, we can also look at potentials. All right, we know that this impulsive move up is what it's a calling a bullish impulsive move. We can measure this, and we can get our upside targets using our Fibonacci what? Extension tool. All right. Let's crunch this down so you can see. All right. So based on this move, our upside target can be 17,000 and 20,000. All right. So these are our targets up here. All right. Stretch this out. All right. So we're looking based off this move. Now, here's what you got to understand too. First, all right. So what you have to understand is that we have something that was just formed weeks ago. All right. Back here in March, we had a what? Impulsive bearish move, and now we got a retracement. So this move still can be valid. It will become invalid once we break this 10-6 area. But right now, this play is not invalid, which means we have to measure it. And this possibly could be a downside target, meaning that price could come this low. You would say, Eric, you're a fool to think that it could. I don't think anything. I just respect that it could. And once again, I played football. I would say a coach must be a fool to go for a fourth down deep in his territory. And every now and then, you got a coach to call your bluff and will actually send that offense back on the field and go for it deep in that territory. It's risky, but they'll do it. And some people have succeeded. All right. So therefore, when we approach the market, you have to accept everything that possibly could happen. Yes, price could come down back into this area. All right. Nothing says it doesn't. That's why we follow rules. Okay. Price can come back and test this level. If we don't break it and we bounce and we go up, it doesn't matter. This price can do all this. It can consolidate for a while. It doesn't matter. Regardless, we need to either break this one, or if we break this one, this is where we're going. Until then, we're just in this area. Okay. As for me, my main buying opportunities is down in this area. If price comes back down in this area, I'm loading up on some of the altcoins. Simple as that. All right. If price does break this area and comes back down and retest the structure that it just broken, which the 10, it come back up. If you look left right here, this is another key level. We have to break $1,400. If we don't break that, what are we coming back down to? The level that used to be resistance, now it's a new support. So therefore, we come back down and we test this 10 something. Now, that may be buying opportunities again. Why? Is because we have shown clearly we're in an uptrend, and we're now in a possible trend continuation pattern of the higher highs, higher lows, etc. So therefore, yes, I will have to abandon it. So yes, there will be times where you will buy and you'll invest at a higher price, but at least you'll be doing so based on a trend that's forming. Okay. Now I am heavily already invested in the market, so therefore I don't really have anything to chase at the moment. So it's not a big deal if I miss out, but I'm patient enough and I understand that. Also, you gotta understand this chart, you see wicks. Wicks need to be covered. They don't have to be, but for the most part, some of them need to be covered. All right. So up here, look, we have a wick. We know eventually price needs to come up and cover that wick. Look down here. You see these two wicks was a double bottom. What did price do on the right? It came down, and look. You look left, what did it do? These wicks were covered by this candle. It came down, it covered it. All right. So now we're down here. Okay. What can cover that wick? If price pushes back down, it can come to cover it. Okay. So wicks, remember, wicks tell a story, all right, but it's not the facts at the moment. All right. The story is, hey, I want to come down this area, but the fact is found in the body of the candle. Okay. Just letting you know. Up here, I remembered this. The price said I want to go here. I want to come back here, but for the meantime, I need to go handle something else. That's exactly what basically it appears that it's saying. All right. Hey, I'm coming here. Now it's time for me to turn around, but I left a print. So think of wicks or tail as a print. All right. So you're looking for clues. And you can go through any chart. You can go back and you can see where a lot of wicks was formed, and you can see where price came back down and covered it. Take a look right here. Price shot down here, then it retreated. It came up, and then what did it do? Price came back down, covered the wick, come back even further, cover this wick. Okay. So that is something to keep your eye on, right? Let's look at this retracement. Let's see what percentage has this retraced using the fibs. All right. And when I do my trading and markups, guys, I normally stick with the fibs, support, resistance, because the Fibonacci is nothing but support and resistance. And I use one moving average. All right. So right now we're sitting at above 50%. We could go up and test that 61%, which remember is a high probability that price wants to pierce. Once price pierces to 50%, it more than likely wants to head up to the 61%. So at 8,130, you can't see it right there, but it's hiding. This is an area of key level that we need to really watch this too, because if price come up here and reject and come down, and if we break this structure, it's going to what? It's going to play out this, okay? We also had a 78% area that we can visit as well, okay? So right now, the fibs are looking good. And if you notice how I would trade, I always tell you guys I trade. A lot of people look for when they look for Fibonacci retracements levels, they look for entries at those levels. A lot of times, I like to trade to that level. Right. So once I get a confirmation that we're in a retracement, I like to trade to it. So imagine if I was in this trade, I would probably end it right around here, and we ride it up to the what? Maybe to the 61. All right, we're talking about a 57% increase. Okay, and then on forex, if you're trading based on a derivative market, whatever, you can take leverage out. You can make hundreds of pips moving up. Okay, so I think this moved 592 pips. Take a standard lot size, it's over $5,900 made. All right, so yeah, that's a simple one on Bitcoin. So that's my areas where I think these prices can head. All right, we got an upside target, and we got a downside target, and right now we're inside of we're inside a channel. All right, this the channel. All right, we need to break above. All right, and if we break below, we can head to this area. I hate to say it, but I hope it comes down to the low point, because you guys, you know this. If something is on sale and you know you can get more of it, why not? All right. I know some of you in a hurry to get rich, but trust me, it is a long process. So if you know it's a long process, you wouldn't mind. I don't care if you told me right now that Bitcoin will, I don't know, consolidate between $2,000 and maybe $4,000 for another 2 years. I wouldn't care at all. I wouldn't. I mean, because I'll just be loading up. Because once you get the momentum and you go to the top side, we good. All right. So you imagine a person who was back, over here years ago, and since it's on a futures chart, I'm sorry, it don't go back because the futures came out later. But think about the people who got it back in 2012, 13, 14 and stuff. How price moved, consolidated, didn't move a lot of the years. It doesn't matter. They're in an extreme higher low right now. Okay. Everything is above, so it doesn't matter. And so eventually in the future, you talking about a Bitcoin at 10,630 will be the afterthought. I mean, that would probably be the absolute bottom for it in the future. If it did come back and test that area. All right. So remember, Bitcoin, once it do go to all time highs, a lot of times it corrects around 80% or more. So once I do another video where we'll get the target upside, and then we'll do a retracement back to 80% so we can find out exactly where that falls. If you're patient enough, I may can do that now. Let's see this one. All right. This is the other chart I've done. All right, so let's see if we can do this now. All right, so we got it. I'm gonna crunch it down. So we got a nice impulsive bullish move. All right, so we're gonna measure here up to here. All right, we'll bring it back down. Okay, so next upside targets was between 31,000 and 24,000. Okay, now let's do this fibs on this one. It's the current move from back in 2018. All right. Okay, so price came below the 78%, so this is around the 80% mark. Okay. So this is what we'll do. Let's just say the target is up here. All right. All right, so try it like this. Take it down from the base. I'm gonna take it all the way to the string to the top to 31,000. All right. If it goes up to this point, and for some reason we hit another 80% drop, now we're coming back down into maybe where we currently are right now. That would be the extreme around this point right here. I may can go ahead and just add the fibs on here. Let's see. Go to settings, because I don't have an 80% retracement on here. Let's see if I can add it in. I don't know if I can add it in. Let's see something. Yeah, I don't want to fool with that. I don't want to mess up my settings on that. Sorry about that. What I can do is I maybe can do a price range from here. Let me drop 80%. There it is. 6,489. If price goes up to 31,000 and for some reason wants to follow the same trajectory of having the same form of correction, remember Bitcoin normally corrects around 80% after a extreme all-time high. We could come back down to the 6,400 something area. Okay, so it's basically in the zone that we are right now. All right, so keep that in mind. It could go higher than this and keep going, but all we have to do is just keep adjusting it and just looking and saying, okay, let's say it go down, let's say it go to 40,000. All right, you go to 40,000 and you just do an 80% correction from the 40,000, and that puts us at 79, maybe $8,000. Okay, so that's one thing to keep in mind. It doesn't have to follow that, but throughout its history, it has corrected around that much. But we're going into mass adoption. The world is implementing it more, so that volatility to the downside may not be as extreme. You also have to respect the fact that cryptocurrencies is a currency, so they're going to somewhat move like currencies. They're going to move somewhat like penny stocks too, to a certain extent. Penny stocks have these extreme moves up, and then they have a massive crash down. That normally happens in volatility markets that are volatile, and there's really no regulation over there like that on the OTC market. So it's like the wild, wild west, where cryptocurrencies and its infancy in the earlier days is something similar like that. It's the wild, wild, wild west. It's all over the place. But as adoption comes in, as more regulation comes in, more exchanges become regulated brokers, the volatility starts to slow down, and then now we have what we call more of a healthy growth, and with more decent healthy pullbacks and not extreme pullbacks. All right, but if anybody looks at any currency pair out there, you'll see the charts can go from extreme highs to extreme lows because the currency at the time, whatever economic data, one currency could be strong for the next 5 years, trending up, with nice little pullbacks here and there. That's exactly what you would start seeing with Bitcoin USD, because it is being compared to USD as far as one of the trading pairs. So if Bitcoin is massive up here, and we've been dealing with this situation, what we've been dealing with currently right now. All right, if that dollar is weak, then you can expect this to go up into this area. All right, and then in the future, if the dollar gains a little bit of strength against the Bitcoin, then we get this pullback. All right, so the pullback, you guys are looking at pullbacks as bad. It's not good. No, that just means that the other currency is just performing well against that. And if you understand that, you just take advantage of both of them. All right. So that's why it's good for you guys to learn how to use a stable coin, tether up, whatever, lock in your gains. All right. And then, and if you want to take a derivatives position, meaning that you want to bet against the Bitcoin when you see it clearly dropping and coming back and testing some of these lows, you can do that. All right, you can lock in profit while also maximizing gains on a short position to the downside, which signify that you just think the U.S. dollar is strong at the moment. So it's multiple ways to continue to make money and be smart, about your investments. As always, make sure you're taking profit as this thing is moving up. All right, and leave at minimum. You need to leave a minimum. My rule is between 10 and 15% that I must leave forever. I know that sounds crazy, but yes, forever. And the reason why I say forever is because if you would have left enough in, if you would have gotten Bitcoin years ago and you still would have left between 10 and 15% of your holdings in, I mean, you have millions of dollars right now. All right. And then you can have a discussion to have what is your exact walk away number. All right. But if you hold and you do this properly, you would never be in a position to have to debate what's a walk away number, because you'll be wealthy enough that, that's just extra change for you in your bank account. All right. So yes, you can say millions of dollars in the future could be, extra change for you. All right, because you done what you were supposed to throughout the cycle of it, and you made your profit. You was able to pay off debt. You was do those things. So it's not like you're desperate to need to say, well, hey, I just need to go ahead and liquidate all of the rest of my holdings, and I'm I'm out of all this. No, you can leave it in for mystery. All right, that's what I tell people. Have a tier system, and I'll go with a couple videos for that later. But for right now, y'all have a great one. All right.